Right, good afternoon, everybody. Good afternoon, and a very warm welcome to Darlington Building Society's 2026 Annual General Meeting. So my name's Rachel Court, and I'm the chair of your society, and I'm also going to be the chair of this AGM today. I'd like to introduce you to the other members of your board, so you know who to direct your tricky questions to later on. So in no particular order, could I introduce you to Executive Director and Chief Executive Officer, Andrew Craddock. Executive Director and Deputy Chief Executive Officer, Chris Hunter. Executive Director and Chief Financial Officer, Stephen Forth. Non-Executive Director, Vice Chair, Senior Independent Director and Chair of our Remuneration Committee, Kate McIntyre. And Kate also gets the title for the longest job description on the board. Non-Executive Director and Chair of our Board Audit Committee, Angela Russell. Non-Executive Director and Chair of our Board Risk and Compliance Committee, Robert Sinclair. Non-Executive Director, Peter Barron. And Non-Executive Director, Duncan Asker. And I'd also like to extend a special welcome to Alex Windle, who will officially take over as our new Chief Executive Officer following the close of this meeting. Alex. So, after a packed attendance at last year's AGM in Darlington, it is great to see so many of our members take the time to join us here today. Thank you also to those of you who've joined online. It's fantastic to have your support. Stockton feels like a fitting location to round off our celebrations of the Stockton-Darlington Railway bicentenary, as we aim to represent all the regions of our operating area, giving all our members equal chance to attend. And what a fantastic venue! I probably don't need to tell you how important the local community is to Darlington Building Society, having reached over £1 million in donations to local charities and good causes last year. But Stockton Arc also does tremendous good in the local community, and so it feels like we're in great company. Outside in the foyer, you might have noticed several of our charity partners. These are organisations which you are directly helping to support by choosing to be a member of our society. And they're all looking forward to chatting with you after the meeting, so you can learn about what they do, about how we've helped, and about how you can get more involved. So please do take the time to talk with them after the meeting. Many of the stories of how you are helping some of the most vulnerable people in our region really are truly uplifting. Now, at this stage, I need to share a few housekeeping and procedural items. Firstly, in the event of a fire alarm, there are no tests scheduled today, so please do vacate the room through the back doors on either side, and staff will guide you outside. We will be opening the floor to questions later in the meeting, and that's genuinely our favourite part of the AGM, so please do have a think about what you'd like to ask our board. And don't be shy in raising anything you'd like, because if it's important to you, then it is important to us. And thank you also to those who've already submitted their questions ahead of time. We've got quite a few of those, so we will start with those at the beginning of the question and answer section later. Now, copies of the annual accounts, the director's report, and annual business statement, together with the auditor's report, have been on the Society's website since the 26th of March. And in addition, the notice of meeting was sent to all members last month, along with a summary of the Society's 2025 performance. So as the notice of meeting has already been supplied to you, can I please ask your permission to take the notice as read? Thank you, thank you. Now, in a moment, for the final time at a Darlington Building Society AGM, as he retires from the Society today, I'm going to hand you over to Andrew Craddock, your Chief Executive. But before that, on behalf of the board and all your colleagues at Darlington Building Society, Andrew, I'd like to put on record our sincere gratitude for all you've done to shape the success of the Society over the last few years. I'm going to let Andrew talk you through the many milestones we've achieved as a Society under his leadership. But something that many colleagues have commented on that set Andrew apart was his dedication to this region. Andrew relocated from Buckinghamshire and has truly immersed himself in the local community. And he underlined his dedication to both the area and to his colleagues during COVID, when he isolated in Northallerton away from his family during that time of unprecedented social and business challenge, so as to best support his colleagues and you, our members. Andrew leaves the Society in robust good health, and we wish him all the very best for the future in your retirement, Andrew. So over to you to present our CEO report. Andrew.
Thank you. So, wow, what a journey we've been on over the last 7 years. As Rachel said, I first stood here as your Chief Executive in April 2019. Since then, we've experienced many challenges, including Brexit, the COVID pandemic, the war in Ukraine, the cost of living crisis, and more recently, the war in the Middle East. But your Society has navigated its way through all these challenges for more than 170 years, remaining true to our core purpose of helping members achieve their dream of owning their own home and providing a safe home for your savings. And despite all of these challenges, Darlington Building Society remains strong and resilient. So I'd like to comment first on our performance in 2025. And then if you'll indulge me, I'll briefly summarise some of the key highlights of the performance over the last 7 years. So in 2025, we steamed through many milestones, and these included the 250th anniversary of the Building Society movement, the 200th anniversary of the Stockton to Darlington Railway. We recorded total assets of over £1 billion. That's growth of just under 10% in the last year, and that cements our position as the 19th largest building society in the UK. In 2025, we had record gross lending of over 230 million and record net lending of over 100 million. And I'm delighted that over 40% of our lending was to support first-time buyers to get onto the property ladder. And our overall mortgage book now stands at just under £900 million. We've also improved our reserves with a record level of reserves of over 57 million, and that provides strength and resilience for the future. Also, we've recorded our record Net Promoter Score. Now, this is a measure of how much you would recommend the Society to your friends and family, and we recorded a score of plus 92, and that's higher than the average of all other building societies. And as Rachel mentioned earlier on, we also celebrated providing over £1 million under our pledge to donate 5% of our profits to local good causes, a pledge that we introduced in 2017. So it's testament to the resilience of Darling Building Society, the commitment of its people, and the support of you, our members, and the local communities that we've been able to achieve so much. Our core operating profit in 2025, excluding the impact of hedging and property revaluations, increased from £3 million to £3.7 million. And this improvement in core profitability is primarily due to net interest income growing faster than costs. In 2025, our net interest income increased by 1.5 million or 7%, although our costs only grew by 0.3 million or 2%. The net interest income was positively impacted by the increasing volumes I've just spoken about and resilient mortgage margins. although it was negatively impacted by the falling interest rate environment during the year and an intensely competitive savings market. Cost growth in 2025 was slower compared to previous years, as we benefited from the investments we've made in the business and a continuing strong cost optimisation culture. So just two further thoughts on 2025, and then I'll move on to the longer term picture. Firstly, savings. Now, 2025 was a particularly difficult environment for savings. We all want to see competitive value for money savings rates to reward savers for their efforts. And yet, despite the Bank of England cutting base rate 3 times during the year by 75 basis points, the rates in the market did not fall by as much, with an intensely competitive market as banks and building societies fought for your savings. We worked really hard to provide the best possible rates we could, competitive in the market, but it's been really hard to balance the rate that we pay to savers compared to the rates that we can achieve on mortgage business and the need to maintain an appropriate balance between mortgage and savings volumes. But despite these challenges, we managed to grow our savings balances by £63 million to over 939 million. And over the last 3 years, we've paid more than 12 million additional interest to our savers than you would have got if you'd received the market average interest rate. Secondly, mortgage arrears. Again, if you've read the annual report and accounts, you'll note that the overall arrears and forbearance remain largely stable year on year, but the level of arrears over 3 months has increased from 4.5 million to 7.7 million in the last year. Now, whilst these levels are broadly in line with the average seen across the mutual sector, they remain below the overall market average, although that gap is reducing. Now, the cause of the arrears fall into largely 3 buckets. Firstly, there's life events, things like deaths and serious illness where people can't pay their mortgage. Secondly, those caused by a lack of affordability, sometimes after losing a job or experience a rate shock as one deal matures and they move on to another mature. But thirdly, there are those who choose not to pay their mortgage. Now, we take all arrears very seriously, and we have a specialist team of colleagues that are dedicated to managing these cases. We treat all members sensitively and sympathetically, but we also take appropriate action to protect the position of the society, and levels of legal action and possessions have increased after the COVID restrictions to ensure that we can act promptly and decisively. So although levels of arrears and forbearance are increasing, our bad debt losses are not increasing significantly, as the level of security we hold is in general higher than the debt. But I would urge any member who's experiencing difficulties to contact us as soon as possible so that we can work together to achieve the optimal outcome. I'd now like to look briefly at the last 7 years. So when you take on a position such as Chief Executive of a building society, you become guardian of the organisation with a primary focus of acting in the best interests of you, the members, and the local community, and to leave the society in a better position than when you started. And I believe the society is in a stronger position now than it was in 2019. So over the last 7 years, what have we done? So we've improved the capability and professionalism of the people as we've scaled the organisation, increasing total assets by 62% in 7 years, from 612 million to over £1 billion. We've modernised the operations and product proposition by investing in a new telephony system, a new website, a new mortgage platform, a new savings platform, and we've transitioned the IT infrastructure to an outsourced managed service. We've also improved the financial performance of the society. We've increased the net interest margin from 1.7% to over 2%, and we've built reserves by 25%, from 44 million in 2018 to 57 million at the end of 2025. And we've also reduced the legacy risks in the society. We've reduced the commercial loan book from around 20 million to less than 3 million, which is less than 1% of the overall lending book. We've sold off our old head office building, and we've reduced the exposure to a historic property development subsidiary. Finally, a word on our support to the most vulnerable in society. I am incredibly proud of surpassing £1 million in charitable donations as part of our commitment to donate 5% of our profits to local charities and good causes. Thanks a million to our members for choosing Darlington Building Society and making this a reality. And thank you to all my colleagues who work with the charities on a day-to-day basis. And thank you to Point North Community Foundation, which helps us to give the grants and ensures that every penny is working as hard as possible to maximise the impact we can make. Because of all of you in this room and online, we are able to provide meals to those who are going hungry, provide emotional support to those who are isolated and vulnerable, provide much needed school equipment for schools in deprived areas of our region, provide financial education, support those with special educational needs, and provide equipment and funding for local hospices to provide end-of-life care, and much more. I could honestly stand here for another 40 minutes and share the countless ways that you have improved the lives of those around you. So again, thank you from the bottom of my heart for all of you for choosing the Society so we can help these people in so many different ways. It has been an immense privilege and honour to be your Chief Exec and to work with so many talented and dedicated colleagues, serving the community in such a very special part of the country. So thank you for adopting me as an honorary member of the Darlington and wider North East community. I really loved my time in the North East. I'm proud to have played a part in the legacy of Darlington Building Society and delighted to leave it in such robust health. I look forward to seeing the Society continue to grow, prosper and mature, handing over that privilege to Alex, who will take over as Chief Exec of your Society following the close of this meeting. I'm certain under his stewardship, the Society will continue to ascend new heights, and I will be watching with encouragement and pride from the sidelines. And with that, I'd like to, for the final time, thank you for your continued membership of Darlington Building Society. Thank all my colleagues who've helped us achieve so much over these past few years. And I'll now hand over to Alex, who will share his outlook for the Society of the future. Thank you all.
Thank you, Andrew. Now, you probably don't want me reading out Andrew's speech again, so I'll get to mine. So good afternoon, everybody. I'm absolutely thrilled to be joining the Darlington Building Society as your new Chief Executive following this meeting. It's actually only my 6th day in the business, and it's a real privilege to be able to meet so many of you so early on. It's been great to hear from many of you just outside the meeting already. People who've been here from 2 years to 60 years as members, which is an absolutely wonderful thing. So the other point to that is 6 days, I'm not going to say a lot. So although Andrew has said to talk about the future outlook, it will be some initial thoughts. So from everything I've learned about the Society so far, it's clear to see that the Darlington is in a strong position and remains true to its roots as a regional mutual building society. That means supporting our savers with good customer service, enabling home ownership, particularly for those customers that are underserved by the mainstream lenders, strong engagement and support for our local communities, and a responsible and well-regarded local employer. Now, I've spent a decade in building societies, most recently at the Cumberland Building Society, just over the way in Cumbria, which is where I live, and the West Brom Building Society. And like other building societies, we are facing into a world that is changing at an astonishing speed. In the short term, the full impact of the wars in Iran and Ukraine on our economy, housing market, and on you, our members and customers, isn't clear, and the global outlook is uncertain and unpredictable. At the same time, the speed of technology development in areas such as artificial intelligence is rapidly reshaping financial services and our customers' expectations. This will and is presenting both challenges and opportunities for the Society and our members that we are well placed to take advantage of. As you'd expect in the coming months with the board and the executive team, I'll be looking at the development of our future strategy. This will remain anchored in our mutual purpose and commitment to our communities. But central to this will be how we offer our customers choice, continuing to offer great service and products for those customers who want face-to-face contact in a world where service is increasingly becoming impersonal, whilst at the same time ensuring we develop in particular the digital services that our other members and our future members need. And that we continue to invest in protecting our systems from the increasing risk of cybercrime to remain sustainable and resilient for the future. So I'd love to hear any members' thoughts on the Society, and I look forward to speaking with you all afterwards. Your questions, your votes, and your feedback all shape our future. Thank you all for your continued support with the Society, And I'd now like to hand back over to Rachel for the all-important question and answer section of the meeting.
Thank you, Alex. Exciting times ahead, certainly. Now, it is over to our members. And as I said earlier on, thank you very much to those who have submitted questions in advance as you voted. We are going to start with those, and then we'll open the floor to questions from the room. So I'm going to ask a couple of my colleagues to join me for this part of the proceedings as we go through. So, first of all, as you might expect, we have had a number of questions about our mortgages and our savings propositions, about the interest rates we offer on those products, and about some of the particular features on those products. Now, some of these were account and customer specific, so we will be responding to those customers with personal queries directly. But to cover the more general points, I'm going to ask Chris Hunter, our Deputy Chief Executive, first of all, to come up onto the stage and run through those. Thank you, Chris.
Thank you, Rachel. All the important glasses first this time. Okay, so the first questions were around card payments and the removal of debit card transactions in our branch network and changing as well to the online threshold that we had there as well. So we've changed this in 2026 and removed card payments from our branches, and we've reduced the amount you could make online down to £500, and previously it was unlimited. The reason we did this is because it cost us an awful lot of money, which we actually paid away to WorldPay rather than keeping that money in the society. And that was over £200,000 last year. So when the bill came in for £200,000, as you can imagine, as directors, we should do the right thing and review that cost base. And we found out that not all providers offer this service, and we were actually an outlier in terms of accepting card payments in branches. And also our online payments being unlimited as well was an outlier as well. So as you well know now, that review concluded that we should cease payments in branches and reduce that online maximum to £500. However, savers can continue to add payments online through a debit card, obviously up to £500. They can continue to pay cash in the branches and pay cheques into the branches. And also they can pay funds into the bank account directly from their own online banking apps straight into the society as well. And our staff in our branches will help people do that accordingly. And rest assured, the money that's saved from the card fees will be reinvested back into the business and higher savings rates for members as well, or low mortgage rates as well. We then had some questions on savings products, in particular around monthly income options and ISAs and additional permitted subscriptions for ISAs as well. And then also about opening children's accounts out of area, so not within our kind of six postcodes. So first thing to address is the monthly income option for ISAs. So there's little demand from members on this, and only 7 out of 70 ISA providers actually provide monthly income options. And at the present, we've got no plans to introduce that. We are, however, reviewing the additional permitted subscription ISAs process, and we're hoping to improve that and make that simple for members going forwards. For children's account, following this member feedback, we reviewed the account conditions, and I'm pleased to announce that the local operating restriction has been lifted as long as that account is open in branch. So it's not available online at our kids' accounts, but it is available in branch. However, unfortunately, we cannot offer savings accounts for people who have grandchildren in overseas territories. So you have to be in the UK to do that going forwards. Next question was around interest rates. As you can imagine, as Andrew and Alex have kind of outlined already, we review interest rates across the market at the moment. And that includes online providers as well as those in the high street when we launch mortgage and savings products. And we also use Moneyfacts as a source in terms of that information. Moneyfacts provide information on all savings account providers and all mortgage account providers. We continue to view our mortgage rates and our savings rates and try and strike the balance between the two sides. Mortgage pricing is dependent on current interest rates and obviously future interest rates as well. And in the last few weeks, Donald Trump again has had an impact on interest rate expectations, and it's now looking at rising rates I think I stood here last year and talked about falling ISA rates around Donald Trump coming in with his tariffs, and this year it's had the opposite effect, and ISA rates actually increasing into ISA season. But be rest assured the site has a range of fixed and variable rate options for both mortgage and savings providers. In terms of the actual savings rates we offer, we won't always have the highest savings rate in the market. That's impossible to do that all the time. But we do offer long-term value, as demonstrated in 2025, and as Andrew's outlined earlier, with 2.9 million of interest gone into our members compared to that market average. And that's £2.9 million worth that stayed in our local operating area for you guys to spend as you see fit. Next, we had a question on mortgages and offering overpayment flexibility and specific overpayment products. So we currently offer 10% overpayments on our mortgages in that kind of fixed rate period. And we are reviewing our options in terms of increasing that overpayment functionality for discount products at the moment. However, my finance director will be really pleased to note that we have no plans to increase the flexibility on fixed rate mortgages, because we need to hedge those mortgages and we don't want the uncertainty of the mortgage balance. Finally, in this section, and I am coming back shortly, unfortunately for everybody, in this section we had questions about whether we consider some new product areas, namely current accounts and lifetime mortgages, and whether we'd offer building finance for the Cleveland area. So first of all, there are no plans to offer lifetime mortgages or current accounts. Both are extremely costly and extremely complex to kind of administer, and both are outside our current risk appetite at present. We've actually got no appetite either to provide specific finance for house builders in the Cleveland area as well. As Andrew's outlined, we're just exiting a partnership that we've had over 20 years in the making in terms of being a former house builder ourselves. We do, however, continue to offer mortgages for anyone that lives in the Cleveland area and their current and future members, and obviously we offer mortgages nationwide. Thank you.
Thank you, Chris. And as Chris says, he will have another section later on, but we thought we'd give him a breather and move on to a slightly different topic. So there have been a number of questions asked about the Society's ongoing commitment to its branch network and whether we have any plans for new branch openings, as well as a couple of specific questions about particular branch opening hours. So I'm going to ask Michael Conville, our Chief Customer Officer, to respond to these. And there have also been a number of questions about member communications too, so Michael's going to pick those up as well. So Michael.
Thanks, Rachel. Afternoon, everybody. So what I'll do is I'll talk about the questions we had about the branch network first, if that's okay. So at present, there's no new plans to open any new branches. However, as members are aware, we have, in contrast to many other financial service organisations, we've invested very heavily in our branches over the last few years, including refurbishments and relocations across Darlington, Redcar and Bishop Auckland. And we'll continue to invest across the rest of the network, and we'll consistently review the usage of branches to ensure that they're continuing to meet the needs of our members and offer the best value to all of our membership. There's a question regarding Yarm specifically and the opening hours in Yarm, the decision to close on a Saturday. Now, we did take that decision to close on a Saturday as the usage by members was very limited, and it was actually declining. So if people are looking to access our branches on a weekend on a Saturday, Stockton is the closest branch for you guys to use. As regards communications, we had a specific question around the email address that we use to send you regulatory communications from. Now, as members are aware, we need to send you all regulatory communications. However, we can't send these from a separate Darlington email address from the general member updates and our marketing communications, because this poses additional security and cyber risks to all members. So I hope you understand that. But looking more broadly, the Society is always aiming to reduce the amount of paper it uses. So we're looking to provide more digital options alongside paper if that's what our members prefer. Now, this includes editable PDF forms, online forms on our website, and electronic submission through our online banking platform. Finally, there was also a specific question around secure messaging, where there are accessibility needs. Now, members can contact us via secure messaging from our online platform, and these will be picked up by our brilliant customer service team, and they'll give you all the support that you do need. In terms of wider accessibility, we always strive to continuously improve the accessibility of our website and our branches, and we now provide additional accessibility for those with hearing impairments, and we also provide large print and braille documents where required. So thank you very much, and I'll hand back.
Thank you, Michael. Now, next, there have been a couple of questions about the number of directors that we have on the board and about whether we need so many, as well as about how somebody might go about being appointed to the board. So, as chair of our nominations committee, I'm going to cover these off myself. Now, we currently operate with 9 board directors, 6 non-executives and 3 executives. The Society's rules actually require us to have between 6 and 12 directors on the board, but the board then approves the specific size it deems appropriate at any point in time within that range. We do also have to have a majority of non-executive directors. So within our overall number, we are required to have a number of specialist non-executive roles in order to chair our various governance committees, such as the Audit Committee, the Risk Committee and the Remuneration Committee. So consequently, our regulators do require us to recruit specific non-executive directors with those particular and distinct skill sets. More broadly, they also require us to have a range of different commercial, operational and leadership experience, as well as financial services knowledge among our board members. So as a result, we do need a diverse range of highly skilled people who are able to hold our executive directors to account for the performance of the business. And of course, our 3 executive directors have that primary responsibility for the day-to-day running and success of the Society through their own teams. Now, we do review the board size and composition on a regular basis, and we are satisfied that the current number of directors is appropriate and it is very much comparable with other building societies. And as to how somebody might become a director, well, if director vacancies arise, then the Society advertises these roles through professional recruitment firms, and existing members are welcome to apply if they have that right set of skills and experience. Now, finally, for me, there was a question about how you become a shareholder of the Society. Now, I'm sure many of you in the room are aware that as a mutual, we don't have conventional shareholders as such, but as a member of the Society with over £100, then you all automatically have ownership rights by default, such as attending at this AGM meeting and voting on resolutions. Okay. Now, the final section around these governance questions related to directors' pay. And one member who wrote in felt that directors' pay was high. So I am going to ask Kate McIntyre, who is our chair of Board Remuneration Committee, to come onto the stage and cover that. Kate.
Hello, everyone. Those of you who were here at our AGM last year will remember that there were similar questions about remuneration last year. The first thing I'd like to say is that as the Remuneration Committee, we strive really hard to strike the right balance between attracting and retaining the talent we need to run a successful building society versus spending members' money. After all, it is your money, spending members' money wisely. So all pay decisions for all levels of the business are overseen by our Remuneration Committee, and that committee is made up of 4 non-executive directors. All decisions are very, very carefully reviewed, taking into account inflation, wage trends, the financial position of the society, and as I've already said, the need to attract and retain the talent that we need on the board. We do also, and you can read all about this in our report and accounts, it's very transparent and there's a lot of detail. We do also operate a discretionary bonus scheme, not only for directors, non-executive directors are not included in that, by the way, but for all executive directors and all colleagues. And that only pays out if very stringent performance targets are met. And again, there's a lot of detail about this in the report and accounts. So as with all our colleagues, the executive director's pay and the executive pay is benchmarked externally every year to make sure that we're not out of line with other societies and other organisations similar to ours. And again, it needs to strike the balance between being attractive enough to attract and retain good people, but not paying out of line. So at the Remuneration Committee, it is all about striking the balance, and that goes to the very heart of the responsibilities of the Remuneration Committee.
Thank you, Kate. Now, we had a question from a member who was interested to hear about what we've been doing to reduce our costs and to improve the efficiency of the society. And since an awful lot has been done here, I'm going to ask Andrew, as our outgoing CEO, to come back to the stage and talk about that. Andrew.
Thank you. So how are we driving efficiency and improving cost performance? So as I said earlier on, we've invested significantly in the society over the last few years, in people, in branches, in technology, and all that's increased our cost base. However, that was an element of our strategy to build an infrastructure that was capable of growth in the future without further increasing the cost base. And that strategy is now being successful and bearing fruit. As I said, in the last financial year to December 2025, our costs increased by 2%. And that was despite inflation running between 3.2 and 3.4%. And that's compared to our revenue increasing by 7%. The cost growth in 2025 was broadly similar to 2024, just under 2%. So for 2 years in a row, we've had cost growth of roughly just under 2%, which I think is quite a good performance. However, even with these increases in costs over the last couple of years, our cost-income ratio is around 80%. And although that's broadly equivalent to other societies of our size, it is something that we want to reduce, and we are working to do so. So the key elements of achieving that reduction over the next few years are going to be continuing to grow revenue faster than costs, growing our mortgage and savings volumes without increasing the number of colleagues and costs, and leveraging the investments that we have made already in the society, including seeking to achieve additional process efficiencies. And we'll also be implementing new digital technology, including AI, and a combination of all these things should start to see that cost-income ratio begin to reduce over the next few years. And I'm sure Alex will make me a commitment to do that over the next few years. Thank you.
Thanks, Andrew. Now, I did say that we would be seeing more from Chris. So Chris's earlier section was around queries about products. We now have a couple of questions around arrears levels, which Andrew has already alluded to earlier, and also credit reference agency reporting. So Chris, over to you.
Thank you again, Rachel, and still no clap for me entering the stage. Thank you. Okay, so firstly, we had a question about increasing arrears levels, and Andrew's covered this extensively earlier. I think the key part is about striking the right balance between keeping a person in their home for short-term things that can happen in their lives, and then those that won't pay over a long period, and making sure that society doesn't suffer any credit losses. We have robust processes in place to support our members in arrears, such as short-term interest only, arrangements to pay, and term extensions. If problems do become more persistent and long-term, we may, in exceptional circumstances, use legal proceedings to improve our position and ultimately possess a home. But that is the kind of last resort from our perspective. As Andrew outlined earlier, we have seen arrears increase in 2025. We expected arrears to stabilise in 2026, given lower inflation than in previous years, high levels of employment and good wage growth. However, clearly the economic conditions have changed materially since we kind of put our plan together last year, so it's continued to be a watching brief around this. Finally, in terms of credit reference agencies, the question specifically related to the fact that we only provide data to one credit reference agency. and that's the one that currently provides our credit information to us in the first place. So we only currently report that information back into Equifax, and we are looking to widen that reporting to more credit reference agencies shortly, which will include Experian and TransUnion going forwards. Thank you.
Thank you, Chris. Now, we did have one query from a member that was actually quite a lengthy number of queries, actually, that were quite technical regarding the report and accounts and the summary financial statements. So we have agreed with that member that rather than going through those in depth in the meeting today, our Chief Financial Officer will go back to that member individually and run through all of his questions with him after this meeting in the days ahead. So we're going to move on to a final section of pre-submitted questions now, which really relates to various aspects of our thoughts and plans for the future. So this section covers things as diverse as our future views around our 5% community pledge and where that might be going, our lending strategy to support the transition to green energy, and I think quite crucially, our thoughts around how we might go about attracting younger members, including our plans for the launch of a digital app. So I am going to ask Alex, as our incoming CEO, to return to the stage and talk a little bit more about that.
So I'm not used to AGMs with all this clapping. It's really rather nice, actually. So I think it's probably we're going to have them in theatres from now on because it seems to work. So yeah, just three questions. So one was around the 5% pledge from our profits to the communities. Are there any plans to increase this? So we've committed to that 5% for till 2030, and certainly when we look across our peer group, it's a market-leading level of amount that we invest in our community. So we've no plans to increase that because we think it's the right amount to balance investment in communities with investment in members and also the future investment that we may need in the business. What we will do this year is start to look at, are there different ways, perhaps refresh how we distribute that 5%, but we'll certainly be looking to keep that 5% at the level it's at. We've had questions around how we will use our lending to support our customers in the transition to green energy. It's a very specific one. And as a small building society, the biggest contribution we can make to the energy transition is to help customers who want to insulate their homes and perhaps look at other ways to green their homes, and also to help new homes be built, because obviously the new homes that are being built are typically built to a new set of regulations, which is much more stringent on, particularly on EPC ratings. So you'll be pleased to hear we do both. So we help customers. We offer home improvement loans to customers who want to do that. We also do an awful lot on new build homes, which some lenders are not that keen on. And we also help customers who want to have custom or self-build homes, which are typically more green. So that's the biggest way we think we can do this. What I would say on this one is it's really crucial we do our bit. But when I talk to customers, the problem is not usually getting the finance. The problem is usually the sheer cost of changing, what's typically for the UK, it's Victorian housing stock, ripping out radiators and putting in a ground source heat pump. These are big costs, or changing the boiler. These are big costs for customers. So we'll do our bit, but I think if we're going to see real change on the energy transition, we're going to need some kind of government intervention over time, such as what we've seen on solar panels or electric cars. And then lastly, two questions which we'll do together. So when are we getting a Darlington app? And what are we doing to encourage younger members who may otherwise choose neo and digital banks? So firstly, how we start to attract the next generation of savers in particular will be a really key focus over the next few years. And that means not only looking at an app, but also what are the digital services that our customers will want? How do we appeal to those customers? So our marketing, and in particular, how do we sell the benefits of a community-based building society to generations that don't necessarily understand what mutuality in a building society is, as well as our products and services and how we distribute those and so on. On the app specifically, and it's worth saying, the app isn't just for young people. The app is for all age groups. We have customers of all ages asking for apps, as well as we have customers who don't want to use apps. And what's really important is we're able to serve both. So the app is a key part of what we're going to do going forwards, but we're looking at plans to do that. I can't commit to a timeline at the moment, but absolutely we'll be looking to do this, but it won't happen in 2026. Okay, thank you.
Thank you, Alex. Now, you've all been extremely patient. Thank you for that. Hopefully those questions, whilst they were pre-submitted by members, have been interesting and useful for you all to hear about. But this is the opportunity now for anybody on the floor who would like to ask questions to do so. We do have, I believe, some roving microphones. So if you could just hang on until a microphone reaches you. Yes, the couple over on the side there.
Hello. I submitted a question about the arrears on the mortgages, and I don't feel that question was raised. The arrears went up by 60%, the 3 month plus went up by 60% last year. The directors did pay publicity bonuses when the arrears went up that much. And B, what are you doing, which is the other part of my question, what procedures are you putting in place, and what multiples are you using to give first-time buyers mortgages? Because the cost of living is only getting worse. It's not getting better for them. I've spoken to youngsters are now getting 5 times the joint wages. I looked up my great nephew's stepmom. His mortgage will be £2,000. He cannot afford that much, but he's being offered that much. Arrears are just going to go.
Okay, well, look, Chris covered some of the general points, and I'm sorry if you didn't feel that they were suitably specific. So I'll ask Chris just to come back a little bit more specifically on those points around lending multiples and a little bit more depth on how we're managing arrears. And then perhaps I'll ask Kate to comment about the bonus and remuneration angle of arrears management. So, Chris, if you want to go first.
So if I address the first-time buyer piece first, I think obviously as a mutual building society, we want to encourage first-time buyers, and I acknowledge it's really difficult for people to get on the housing ladder. Although easy to get on the housing ladder in the northeast of England and other parts of the country at the moment. So we offer income multiples up to 6 times loan to income, and we do that based on an affordability assessment. So that includes all your income, and it includes the mortgage rate that's stressed at a higher rate as well than the current pay rate. But we don't do that for everybody. We do that for kind of making sure that those people have the right earning potential as well around that. We do that with loan to value criteria within that as well. So basically we restrict the amount that we'll lend to somebody based on that 6 times income by reducing that loan to value, which means if your house is worth £100,000, we'll lend £90,000 as an example. We don't give mortgages to people that can't afford those mortgages in the first place. I know it's really difficult to get on the housing ladder at the moment. I have children that are about to embark on that journey as well. However, we don't lend money willy-nilly, effectively. We've also got the risk management process in place. So if that's the underwriting process that stops us lending it in the first place, we also take out insurance if there are credit losses around it, which basically is mortgage indemnity guarantees, which effectively cover the society's losses. And like I outlined earlier, the process that we've got, trying to keep people in the home as long as possible. But obviously, if they lose their jobs, then the best thing for those borrowers to do sometimes is to actually sell the property. We prefer them to sell the property before we have to possess it and take legal action. Clara, who handles my arrears, is on site today if you want to chat with her afterwards to kind of go through some of the details. And if there's any specific concerns that you've got, then please let me know. In terms of the 3 month plus arrears increasing significantly year on year, they have increased, there's no doubt about it. Andrew covered it earlier as well. They are under robust risk management process at the moment. We haven't lost any money in terms of society perspective in 2025 on houses that we have repossessed, so those robust measures are in place. We are concerned about it, but it's part of the balanced scorecard from our perspective, which I'm sure Kate will have more of an insight on.
You ask a really, really good and really pertinent question with relation to bonuses. Exactly. So Chris has spoken about the operational side of managing arrears, and I'll say as a general comment, and I know Rachel and other directors would echo this, this is something we take incredibly seriously, and it's just something we discuss at every single board meeting. And indeed, we have a board meeting following this AGM, and it will be a subject of discussion there. In terms of how it relates to board remuneration, executive director remuneration, you'll see if you look on our website at the detailed annual report and accounts that there's much more detail about how the bonus scheme is structured. What it doesn't say in the annual report and accounts is that the scorecard, which is a basket of around 15 measures, is set the previous year for the following year. So the basket of metrics for 2025 was set in the last quarter of 2024 in readiness for the start of the year. And at that point, we hadn't seen the uptick, which you're quite rightly referring to. We're very well aware of what you've raised, and you will be pleased, I hope, to hear that in our corporate scorecard for 2026 bonus, which we set at the end of 2025, there is a specific measure in the bonus targets around arrears levels. So hopefully that gives you comfort, gives everybody in the room comfort today that we're very focused on it, and it does actually directly relate through to the executive director's remuneration.
Good afternoon. My question isn't technical because I'm not a campaign wife. Do you outsource your services to overseas? Did you?
I think that's quite a short answer, which would be no in general terms, but anything that anybody would like to add beyond that?
The only thing I'd add is that sometimes those companies use overseas companies, so they use Microsoft or AWS as the kind of cloud providers, which Andrew outlined earlier. So it's a kind of fourth party on a third party, but we don't outsource to overseas companies.
Right. The second question is, you've been around 170 years. You've only mentioned the Ukraine war, the Gulf War, what about the Boer War, what about the First and Second War? Are these wars irrelevant because they're not constant, they're not consistent now?
Well, we could have had a very lengthy history expose, I'm sure, on all the traumas that our country has been exposed to over the 170 years. Yeah.
They mentioned overseas events, but nobody mentions the present government.
Okay. Well, I think what I would say on that, yeah, the long-term history of the society, I think the fact that we're still here really is testament to the fact that we do, whatever the current crisis of the day is, we do have the resilience to survive and indeed thrive, notwithstanding the short-term impacts of those. I think political change, we all know we have to live with the results of our democratic process, and that changes every few years, as we all know. And the society is, again, weathers those storms, whatever those may bring, and is a constant, notwithstanding all the turmoil that might come, whether it's domestic or overseas. Thank you. Anyone else? Yes, over this side, yeah.
In interactions with DBS staff since January, I've come across a couple of things which I'd like to get an answer to. The first one is that I became aware of an apparent error in interest calculations. And when I asked a question about it, I found out subsequently there had been a minor system failure in the amount of interest paid to a certain number of customers. I think up to 40% of one-time savings. I'm just wondering, I'm not steps are being taken to correct that, but what, if anything, is being done to inform a lot of members who may not be aware that it's not being done?
So I'm thinking this probably refers to the issue with our regular saver product at the year end. Would that be correct?
Yes, both.
Yeah.
Maturity and annual interest, depending on what the duration is.
Okay. Yeah, I mean, this is an issue that has had discussion at board level, and we are aware of it. But again, in terms of the detailed communications that we've had with members, Chris, would that be one for you to pick up?
Yeah, so I think we've corresponded to everyone that's impacted on the regular saver event and outlined what steps we've taken to put the accounts right. And we apologised at the time and apologise on record again for getting that wrong from a society perspective. In addition, we've reviewed the annual interest calculations as well, and our finance director has picked up with a member directly that has had a complaint around it or giving us feedback around that. We are reviewing it. We're confident that there's not a systemic issue, and it is, as you outlined, a minor issue, but we're still working on it to get definitive response for all members concerned.
So just to reassure you, we haven't waited for members to contact us and address those cases individually. We've proactively found all the members. Once we were aware of the problem, we found all the members who were affected by that, and we've actively gone to them to tell them about it and to correct it for them.
One more question, that's okay.
Sorry?
One more question.
Oh, yes, please do, yes.
On the question statement, something seems to have changed. Not quite sure what. So, I'd like to ask the board to time to make a policy decision sometime between the previous AGM and this one. So, issue the statements saved. More detail into that. I'm now being told that statements for things like bonds and ISAs will only be issued to eligible accounts. An eligible account being an account that isn't online, that sees no passwords, but savings certificates. Because I'm finding that going into branches, they're now being told, I think, not to issue statements. Some threats, or it will be sent either in the April or maybe the following financial year, sometime after the interest payment might have actually been made. So the question is, has the policy changed? If it has been changed, and why?
Okay. Chris, I guess that might be one for you again. Sorry about this.
No. So we haven't changed anything. The statements have been later than we wanted this year, but we are working again to get those issued shortly. We haven't changed the policy decision, so your interest is either in the passbook or it's available online for you to see. If it is a certificate, then effectively it will be issued as part of that annual statement process, which is slightly delayed.
Is it correct or not correct that you can or cannot get a statement in branch on request?
Michael, I don't know. I think from my perspective, there should be an ability to issue a statement from the branch directly. If that's not the case, then we'll pick up with you afterwards, Mr. Ross.
Yeah, I suggest we do pick that one up with you afterwards if we can, if that's okay. So, yeah.
Customers who have a passbook can obviously get their account information immediately. So, if you have got certificates, changing that to a passbook will give you access to quicker information. But of course, when we take out an account, we don't choose whether we want a passbook or a certificate. You decide on that. So, could you give customers the choice to have a passbook instead of a certificate and then get access to that information more quickly?
I'll take it again, Rachel. Yeah. So we could give people a choice. However, from a cost perspective, the cost of a passbook that has one transaction for a fixed rate bond, and that's the only transaction that takes place over a 12-month period or a 2-year period, is quite costly. Those passbooks have a cost. The wallets that come in have a cost, and the printing of those passbooks as well in branch also has a cost. From our perspective, we reviewed issuing certificates instead of passbooks for fixed rate bonds around 3 or 4 years ago. We have had some feedback from customers that do prefer passbooks. However, from an overall cost perspective, we are trying to reduce the cost so we can invest that back into the overall rate for our members overall.
Okay, thank you. Yes, at the back there, please.
Good afternoon, ladies and gentlemen.
Afternoon.
Yes, I'm ex-Corps of Signals, military communications. Confucius said, no man's made a lock that no man's cannot pick. It stands forever. There's another Chinese gentleman called Sun Tzu. He wrote a book called The Art of War in 2500 BC. And the only people who won't read this thing are those in the City of London, Westminster and the Town North. Now, the Dutch government have just invested tens of billions of euros into updating their coastal defences, their inland waterway defences, new industries, new tourist industries and homes. Last year I did I interrupt you? I know I'm getting it. Very relevant, the second. It's relevant for everybody. I'm going to get to it.
Oh, okay. Over to you then, sir, if you could ask us the
Okay
question.
then, yeah. So this company's invested nothing in these coastal defences. You
Ye-
have to.
Okay. Well, look,
Now,
if
the
you...
other thing is this.
Mhm.
The senior British general who sat on the NATO committee, just retired. The British Armed Forces have got a lifespan of 2 weeks. Now, the most important lifeline of any armed forces and nations is the merchant navy. So how long do you think the merchant navy's going to last?
Well, if I could answer that one, if you just let me speak for a moment, because I think you've said quite a bit, if you wouldn't mind just letting me respond a little bit. The Merchant Navy, well, my dad was a proud member of the Merchant Navy, and I can assure you that it's an institution that I care very passionately about. But Darlington Building Society is responsible for many things in our local community. But sadly, we can't claim to be responsible for the health of the Merchant Navy, or for the health of our coastal defences, or for the security of the country. It's a very great shame that we can't take those responsibilities on, but believe me, there are far more important people than us who are struggling with those responsibilities. So I do understand your concerns entirely, but it's not something that's relevant for this board, I'm afraid.
What I'm asking you is to take these into consideration when you're talking to that
Yeah, okay. So you're asking about lobbying, essentially, and I can assure you we do talk with our local political representatives about a whole range of subjects, and we do seek to represent members' views on those various topics. Yeah, I guess that's the world of politics, isn't it? Can we have the next question, please? Yes.
Good afternoon. I've served with Darlington Building Society for about 30 years now, various accounts, and one of the reasons is because you're on the high street, you're accessible, it's a mutual. One of the things that I've noticed over time is that this front-facing customer staff seem to have reduced.
Right.
And in branch, we seem to wait quite a long time to be dealt with if there's a queue. And I often think, is it like a supermarket where someone else should jump on? You know, because you've got two desks, and I very rarely see those 2 desks manned. So is this becoming a policy to reduce that customer-facing staff and focus more on online? And the other thing I'd like to point out is the direct debit payments, which is fine, that's your policy.
Mm-hmm.
When I went in to pay by direct debit, I was told, you stopped doing that. No, I didn't know. It's
Okay.
online. It's on our website.
Mm-hmm.
Well, you can't automatically assume I'm going to go onto a website regularly to look for that kind of information.
Sure.
So I think there needs to be a balance between absolutely essential in this day and age online services, but also maintain that really important focus for the Darlington Building Society, that front-facing customer service.
Absolutely, and branch customer service is at the heart of what we are about. So I hear what you're saying, and I think we should just ask maybe Michael to comment a little bit about things like numbers of staff and queues in branches and so on.
Great question. Thank you very much. And, you know, first of all, thank you very much for being such a loyal saver for 30 years. It is very much appreciated. I guess from my perspective, it's making sure that we do have enough staff within our branches to meet the demand of the people coming in and using those services. Now, as part of the branch network, we have to operate with a minimum amount of colleagues on the tills at any one time. Now, sometimes what will happen is depending on the peak periods, we might be quite busy because there may be some queues there. Now, obviously, we'll try and eradicate those where possible, but on occasion, sometimes there's just so many people coming into the branches at a particular time of day for them to actually do some transactions. Now, one of the things we might look at in the future is looking at the flows with times when people are coming into those branch networks to make sure that we've got enough people at the right time to to serve the customers on the times that they want to be served. So let me take that away as a new person just joining the Building Society, because that's something I've done previously in a previous role, in making sure that we've got enough colleagues ready for when people are using the branch network.
Thank you. I raise it because the other staff in the building in the vicinity.
Mm-hmm.
So there'll be other staff in the building in the vicinity
Yeah.
standing looking at the queue.
Yeah.
And I just think
Yeah.
be proactive.
Exactly. Believe that. I'll take that challenge on. Absolutely. Yeah. 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 And just one final thing, I know you raised the point around, you know, the difference between online, and we're not here to encourage all of our members to go online. We truly believe in having face-to-face presence on the high streets. You know, that commitment I talked about earlier around the refurbishments and the relocations in our branch network, and that commitment to continue to invest in the branch network, because we just feel so passionately about that, because that's what our members want. You know, our members continually tell us that being present on that high street is so important to them, but it's also important, and I think Alex mentioned this earlier, it's about giving choice to members as well, and convenience to members. So, you know, as we start to grow the different types of customer base over the next few years, we'll have to make sure that we offer choice, both physical and digital.
And thank you very much for that feedback. It really is exactly the sort of thing we want to hear at these sessions, so it's much appreciated. Thank you. Any more questions? Yes, gentleman here.
More just a statement, I guess, rather than a question. First of all, to Andrew, looking at the results in the last 7 years, they have been incredible. And I think Andrew deserves a great round of applause for everything. I know when I was at Darlington, somebody once told me, and it was turnover and profit. And they said at that point, turnover is vanity and profit is sanity. And looking at the results that you've got, Andrew's managed to achieve them both. Then, if I could say one thing to Alex, as one former Cumberland employee to another, take it over, don't copy it.
Thank you, and we all share all of those sentiments. Any more questions? Yes, gentleman there.
Are there any plans to replace Darley for young savers? Are any plans in the pipeline for that? That's been around for a number of years now. Grandchildren love them, very tactile rather than digital. And just wondered if there are any plans to replace.
Well, Darley is a well-loved character, I think it's fair to say, in our organisation. But Chris, as our product representative, anything you want to add on children's accounts?
Yeah, so there's no plans to replace Darley at this stage. We're quite proud of Darley. Obviously, from Darlington Building Site, we think it's a great product, and like you say, it's great for kids to actually look at something that's real rather than just a digital screen. I think as well, from our perspective, we have reduced the age that Darley is available to, so we thought it wasn't really suitable for 18-year-olds to be opening Darley accounts. So we've brought that down a bit, and we've offered instead a kind of teen goal saver account, which is available for younger people. As Alex has outlined, in terms of that mobile app for the future, we really love to get that mobile app for a younger generation and get them into that kind of saving spirit alongside the kind of physical means as well. So no plans to replace Darley at the moment. If it was tired and dated and didn't resonate with our members, we probably would replace it. But I think it's been here for over a decade now, and it's proven to be successful.
Thank you. Any more? Okay, well look, thank you all very much for your participation in the Q&A. It was really useful for us, and I hope, as I say, it was useful for some of you too to hear those answers. We are now going to move on to the resolutions and the voting part of the building. So thank you to my colleagues. And if I could invite Paul Edwards, who is our Chief Risk Officer and Company Secretary, to come and talk us through the resolutions and the voting. Paul.
Thanks, Rachel, and good afternoon all. As Rachel's outlined, it's my role here today to announce the results of the voting. The following ordinary resolutions were proposed: to receive the Director's report, the annual accounts and the annual business statement thereon, with the Auditor's reports for the year ended 31st of December 2025. To approve the report of the Directors on remuneration and the remuneration policy, and to reappoint PricewaterhouseCoopers as auditors until the conclusion of the next AGM. Finally, and in accordance with the Society's rules and relevant legislation, I propose the election of Duncan Asker and Alex Windle as Directors, and the re-election as Directors of Peter Barron, Rachel Court, Stephen Forth, Christopher Hunter, Kate McIntyre, Angela Russell and Robert Sinclair. Now, the voting closed at 5 p.m. on Thursday the 23rd of April, and all votes have been counted. The results of the votes are shown on the screen behind me, and these will be made available on the Society's website by the Corporate Governance section at the close of today's meeting. From the votes received, I confirm that each and every resolution has been carried. And I will now hand back to Rachel for the result of this year's Charity's Choice and the donation.
Thank you, Paul. Now, this year, we agreed to donate £1 for every online vote that we received, and 50p for every postal vote, and we're going to donate that to charity. And our colleagues all voted for their preferred charity to receive the donation. And this year, I'm pleased to say that is St Teresa's Hospice. Now, I'm delighted to report this year that more than £2,700 has been raised through this process towards that vital support and end-of-life care that hospices provide. So I would like to welcome Carol Charlton, Chair of St Teresa's Hospice, to the stage to receive the donation and say a few words. Carol.
I've just been promised a cheque or something. Online transfer, we can take that. I think you have our details already. Well, thank you so much for giving me this opportunity to talk about St Teresa's and the difference that your support makes to us. It's been a really fantastic year for St Teresa's in many ways. It's our 40th anniversary, not nowhere near 170 years, but 40 years of care for our community. And we have also been proud recipient of a fantastic award from County Durham and Darlington Together Awards, and we are the Charity of the Year for them as well. So shortly after our AGM at the final part of last year, we went along to receive that award. That was fantastic. And we also received a more local award in Darlington for our exceptional care. Now, all these awards are fantastic, but they don't bring any money with them, and it would be absolutely, it would never happen that I stand up in front of an audience and not tell you about a little bit about our financial situation. We are not in this glorious position of, the idea of making a profit is so alien to us. We've not made any profit at all over the last few years. And in fact, we run a budget deficit. And the budget deficit forecast for this year is running at about $750,000, which is just phenomenally high. And this is, and I don't want to get into politics because I can see how well that goes down with this audience. But nonetheless, we have been facing pressures due to some political choices, I would say. So the cost of living is impacted, for our costs, have been impacted by the national minimum wage rise and the national insurance rise. But I would be really keen to talk to Andrew before he disappears about how you can your cost efficiency ratios could be maybe changed a little. But since I've become chair of the board, I've been absolutely determined not to cut services. We do have reserves, although they are dwindling rapidly, as you can imagine. We're spending far more than we're taking in. I don't want to cut services, and one of the main reasons for that is because I know how essential they are. We did a big survey of our customers, our service users and their families to find out which of our services they valued the most, and they all came back and said, well, we value them all equally, and they all have to stay. So that's what we've been working on, but I think obviously we cannot continue as we're doing at the moment with the current financial situation, and if things continue as they are doing, we will be having to face the hard reality of cutting services next year. But it's not all doom and gloom, and we are working behind the scenes, and I had a meeting with our MP only last week to see how we can sort of influence change. But that's the politics aside. But like Darlington Building Society, St Teresa's success really is dependent and was built on being community-based, and we share so much in common, apart from obviously the finance bit. We are valuable to our customers, our service users, our patients and their families. We support them through some of the most difficult times in their lives, some of the most challenging times, absolutely. I've made some notes because I'm not very good with numbers and remembering them all. But anyway, I just wanted to say we helped over 500 people in the first quarter this year. So that's a significant number of people. We look after people from Darlington, of course, but also the district, which includes North Yorkshire and moving into County Durham as well. And for our inpatient unit, we don't have a postcode restriction on that. If there's a connection, if there's a reason why somebody would want to come and be in our inpatient unit, if the family lives in Darlington, for instance, we will try to accommodate those people too. When I started as a trustee many years ago now, I was very ambitious that we would expand our services. Sadly, that's not been possible. But it still could happen with the right support and a bit of a shift in the direction financially. But Darlington Building Society have been instrumental in helping us right from the start 40 years ago, and over the years have donated over £120,000, which is not a small amount of money, and that has enabled us to develop one of our specialist rooms for the inpatient unit. We've invested in some equipment with that money. But more recently, what has been fantastic, and thank you, Andrew, for allowing this to happen, and Rachel, just fantastic, the number of hours of volunteer support. So as a hospice, we have some paid people. I'm not one of them, but we try and keep the salaries down to what we can afford, but equally we want to attract high-level people with the right skills. But volunteers are so important to us and always have been. We were set up as a charity, and it was always based on volunteering. And so almost 200 hours of volunteering has been provided by Darlington Building Society over the last year. And that's been done in different ways in our retail units, but also at our events. And it's now I'm coming to the end of what I'm going to say, because I know there's a lot of jeopardy involved. I thought, actually, I said to Andrew before the meeting, it's quite a lot of jeopardy involved allowing the public to ask questions. And I think it's a very brave thing to do. But it's equally brave to allow me a microphone, because you don't know what I'm going to say. I don't know what I'm going to say sometimes. But what I will say now, though, is thank you to the community, and that includes everybody in this room, I'm sure, that supports St Teresa's. Thank you to your wonderful staff at Darlington Building Society. How you can help us in the future going forward, please look at our website, but you can also phone us and drop into our shops if that's not available to you. We have plenty of events coming up that you can support, and one of our biggest fundraising activities that is ongoing, and this is we have to be careful what we say because it is gambling officially, and the Charities Commission and the Gambling Commission are watching me. But I don't see it as gambling as per se, because it's more of an investment. If you can spare £1 a week to come into our St Teresa's Darlington Hospice Lottery, we would be so grateful for your support, because that provides us with some regular income that can really help sustain us. And the amount of money that we get from that is almost paying for a whole nurse, which, you know, obviously that could increase. So please have a look at our website, call in at our shops or give us a call, and we'd love to sign you up to our lottery. And thank you once again, and thank you for that wonderful amount. Thank you for voting.
Thank you, Carol. Fantastic to hear about the work, and I know how challenging the financial position is for you. So we look forward to continuing our support in the ways that we can. Okay, just bear with me. I'm just going to find the remainder of our proceedings, which I think seem to have disappeared in a puff of smoke. I think we are now in a position where we can draw the formal part of the proceedings to a close. But we do need, though, before we let you all go, to say a few words of thanks. So thank you very much to the ARC here in Stockton for hosting us so nicely. And thank you also to all of our colleagues who have put so much time and effort into preparing all of the work that goes into the AGM and the proceedings on the day. Thank you all very much. And thank you most of all to all of you, our members, for taking the time out to actually come and attend in person and to participate in the governance of the Society. It's really important to us. You are, as one of the questions said earlier on, you are our owners, and you are quite rightly here to hold us to account for our performance as your board. So thank you for your commitment. Thank you for your time. I wish you all very safe travels home on your onward journeys. And finally, I want to say a final thank you to Andrew at the end of the proceedings today. It truly has been a fantastic achievement over the last 7 years, Andrew, and we genuinely do wish you all the very best for the future. Safe travels home, everybody, and hope to see you same time next year. Thank you.